Welcome to Sales Tax and More, your go-to resource for all things state tax related. Now here's your host, Michael Fleming.
Hi, Mike Fleming here, founder of Sales Tax and More, and today's co-host of the Sales Tax and More podcast, where we talk about everybody's favorite topic, which is, of course, sales tax. And today we're going to go over some of the questions we've been asked during our webinars. But before we do, let me introduce you to my co-host, Ellie Moffat.
Hi, everyone. It's great to be here. I'm excited for today's podcast. Maybe I say that every time, and it's because I'm excited for every one of these podcasts. So before we go ahead and get started here today, I'll do a quick introduction for Sales Tax and More. Sales Tax and More is a full-service consulting and solutions firm. We have a really great team here of experienced tax professionals who are very dedicated to fulfilling your state tax and related needs. So we do a lot of sales tax returns, sales tax registrations, consultations, research, audit defense, exemption certificate management, and like our name states, more. So if you have questions about our services or you'd like to work with us, please reach out. We would love to hear from you, and we would love to work with you as well. And we truly do have a great team. Shout out to our team. So that being said,
Yay,
Mike,
team!
I'm going to send them this one. Force everyone to listen. And but let's get started. Mike, can you talk about red flags that can trigger an audit? And what are some big things someone should be paying attention to? What a broad question. So I guess you're going to take this whatever direction you want.
Yeah, very broad question. I was just going to ask you, how many days do we have to tape this thing? Because I could speak forever about this. So we'll try to narrow it down to a couple. Some of the more recent issues that I've seen, maybe it's not something you're doing personally, except for the fact that you're following the crowd. And when a state finds out that the crowd is doing it wrong, a whole industry is doing something wrong, they'll target that industry. And where usually, if you're a small to mid-sized company, you're chosen for audit based upon a lottery, and it's the type of lottery you don't want to win. But if they realize, like in the state of Texas, a lot of marketing and website design companies are being chosen because a lot of those companies are just getting it wrong. In some states, it may be contractors. When a law changes, they'll target a specific industry. So if the whole industry is doing something incorrectly, then pretty much everyone in that industry is going to be audited at some point or another. Now, second part of that question, what are the big things I should be paying attention to? Well, you may not be wrong by being part of the crowd, but you may be. A lot of companies we talk to say, well, this is the way everyone does it. Well, it doesn't matter how big a company is. I mean, there are huge companies out there that get it wrong all of the time. Sometimes the bigger companies get it more wrong than the smaller companies because the bigger companies have a heck of a lot more turnover, or they don't have any turnover and they're doing something the same way for the last 20 years and things have changed. So they also have a lot more money to fight these audits than you do, or I should say in general, rather than singling any of you out there. But so what you want to do is you want to make sure, not by looking at the competition, how they're doing it, but actually take a look at the way the state thinks you should be doing it. And that's what really matters. So you can do that by contacting a company like us, and we can do some type of exposure review. You can do that by digging into the statutes, the rules, the regulations on your own. Some states have that all posted out on their website, and it make it fairly easy. Other states, not so much. It's closely guarded secrets, it feels like sometimes. But what I would not do is do an AI search on the internet, because a lot of misinformation on the internet, and AI as of today can't tell what's right or wrong. It's really just regurgitating what's out there, and they may be giving you the incorrect information. So that's one area there. Don't go along with the crowd. You don't want to do what someone else is doing because they're the big boy in town and you assume that they're getting it correctly. Do the legwork yourself or hire someone like us to do the legwork for you. So that's one thing. Another thing that causes red flags is paying late when you're doing your returns, constantly amending returns, um, using the wrong form when you're doing your returns. These are all things that are returns related, not balancing correctly. In other words, the state's expecting a certain number and you're not even close to it. These are all red flags that come to returns. When it comes to returns, could cause a red flag. And if you get enough red flags, you get one red flag, it's not like the state's going to be breathing down your neck and coming looking for you. But if you have enough red flags, now we've got a pattern. And you don't want to be forming patterns that catches the state's attention. So that's another area that you need to be paying attention to. Also, if you're asking for refunds, um, quite often, or very large refunds, you got to be ready for the state to come and take a look at you. Once they have your money, a lot of times they don't want to let it go. So if you're going to be asking for a refund, you still got to ask for it because the refund it can sometimes be a lot of money. So you got to ask for it, but be prepared that that may trigger an audit. That's a red flag for an audit very often. So, I mean, I could go on and on and on and talk about different types of red flags, but I think these three are some that you should be paying attention to. And if you have other concerns, send us a question. We'll see what we can do to get it answered for you.
All right. Well, thank you, Mike. I think that you took it in a good direction here. So, that being said, let's go to the next question. So, how can someone be proactive when it comes to preparing for a sales tax audit? I think we've led in pretty well here.
Well, there's two times you want to be preparing for an audit. One is pretty much consistently, you got to have good processes in place that will keep you prepared. So we've got a series of webinars. It's called the 7 Pillars of a Successful Sales Tax Program. You want to be following those pillars. So I invite you to go and we've got copies of those webinars out there. And if you're doing those things, it should keep you prepared for sales tax audit. Now, it doesn't mean that you're never going to be audited. A lot of audits are done on a lottery basis. But if you have a good plan in place, you shouldn't fear an audit. An auditor is always going to look to find something, but your assessment should, and I hate shooting on people, but they should be minimal if you're actually got a process in place. And here's the important part. You're following the process. Because a lot of times you can have a great process, but your people may not be implementing it. So you got to spot check your own process from time to time internally. So that's number one. You got to have a process in place. Number two, you got to really be concentrating on two areas. The biggest assessments when it comes to sales tax audits are usually related to exemption certificates and resale certificates, or a type of exemption certificate, and use tax. So since those are the two biggest areas, if you pay attention to those two biggest areas, and dedicate people to them and make sure they have the resources to do it correctly, or you hire someone like us. And generally, that's going to be a cheaper solution to keep you compliant when it comes to certificates or use tax than to constantly be training people to handle your certificates in-house and stay on top of the changing rules out there. But if you're chosen for audit, then what I would do is an internal audit, mock audit, whatever you want to call it. You can have someone like us do it, or you can do it yourselves. And what you want to be concentrating on is your certificates. You got to make sure that they're completely filled out. You got to make sure that the reason for why someone is saying they're got a resale certificate is makes common sense. For example, if you've got a resale certificate, you're selling desks, and you've got a software developer issuing you a resale certificate. Well, does that make common sense? Maybe they're going to start selling desks, but you got to at least ask uh, the questions. Why is this resale? That's what the auditor's going to do. And nine times, actually 99 times out of 100, they should not have issued that resale certificate. They should have just paid the tax on it because they're buying it for use in their own business. So when you're accepting a certificate, you got to make sure that it's completely filled out, that there's an actual exemption that could be used, not that they actually qualify for it, but that there's an exemption that they're saying there is, and that it makes common sense. So someone's got to be checking those audits for those things. Not those audits, those certificates for those audits, because just having a certificate on file is not enough. You got to make sure that it's going to survive an audit. It's going to survive an auditor taking a look at it. So that's number one. The second is use tax. Make sure that if you're not paying tax, maybe because your vendor didn't charge you tax, or maybe they didn't know they were supposed, that'd still be not charging you tax. But if there wasn't tax charged on your purchase, should there have been tax charged on the purpose? Because just because your vendor doesn't charge it doesn't mean it's tax free. Maybe the tax should have been collected, or maybe it was a taxable item. And if it wasn't paid to the vendor, then you need to self-assess and remit it to the state as a consumer use tax. So those are the two biggest areas that cause the largest assessments out there. So that's where you want to concentrate your time and energy, where the biggest problems usually show up. Now, if you're selling direct to consumers and don't collect a lot of certificates, you don't have a lot of exempt sales, skip that. Concentrate on the use tax. When you're looking at use tax, if you made any big software purchases, a lot of times they aren't taxed. Software is taxable not only at your main office, but anywhere it's being used. So you may have a use tax responsibility in some of these other states. So any big purchases, any improvements to realty, when you're opening a new office, there's a whole lot of purchases going on. These are the things you got to concentrate on when it comes to use tax in an audit, because you know that the auditor is going to spend their time there because that's where the money generally is. It's probably too late to check taxability once you're getting audited, but it's not a bad job. You want to make sure that the auditor knows what they're talking about. So you got to brush yourself up on, are there any recent changes on taxability of the items you sell? And even if it's too late for this audit, you can make the changes going forward. And sometimes it may not be too late. Sometimes you might be able to get in there and change some of the things in a way that it's going to help you inside of the audit. So maybe you can reissue some of the more recent invoices. And a lot of times you can go back to your customers and ask them, if you haven't collected tax, to, hey, we're being audited. We should have collected the tax. We didn't. We need you to pay the tax. And a lot of times they will. Especially if it's a, medium-sized company. Smaller companies think you're trying to rip them off. Bigger companies, they don't have the time to get involved a lot of times. But those medium-sized companies have been in your position before, and a lot of times they're going to work with you. So Those are just a few of the ways. I mean, again, when it comes to sales tax, I can talk and talk and talk and talk. We don't have days to go over this. But again, if you have questions, go ahead and send it to us and we can go into a little bit more detail. But where I would start is the 7 pillars of a successful sales tax program. And we have those videos of the past recordings we've done of this audit. And every couple of months we redo it. So we invite you to come to those. They're free. So that's where I would start.
All right, thank you so much, Mike. And you know what? Let's wrap it up with one more question here. Audit defense for us. So this is really a question about us. Who might this so our audit defense service, who would that service benefit? Who is not right for it? Who should be looking for this? Yes.
Anyone with a potential larger liability. So, um, if you're going to owe $3,000 of sales tax, it doesn't pay to hire someone like us. Any company, try to do it yourself. And, if uh, if you have to, then you pay the tax. It's going to be cheaper than hiring someone like us. But if you've got a number that's material to you, if it's going to leave a mark, if you have to pay it, then it pays to bring in a professional for a couple of reasons. Number one, so many companies out there, when they're defending themselves, they let emotion rather than facts take over. And that is the worst way to interact with an auditor. You got to take the personalities out. You got to take your beliefs out. Well, I think it should be this way. Well, the auditor doesn't care how you think it should be done. Here's the way that the state says it should be done. So it's just the facts, Sergeant Joe Friday, just the facts, ma'am. So that's how auditors think. So that's it's probably no one out there knows what I'm talking about, but I'm dating myself.
Write in if you do.
Yeah,
Just
if you do,
leave a
right in.
comment. Yeah.
But that's that's really what it is. I mean, it's a benefit. We're a third party. We can address the facts without getting emotional with an auditor. If you can do that, great. If you have a command of, your industry and you're sure that you know what's taxable, what's not, maybe you can do it without us. But keeping it to the facts and keeping the emotions out of it, very, very important to getting the auditor on your side. And the auditors have a lot of power. So they'll work with you if you're working with them, and keep it about the facts and treat them with respect. They don't have to be your best buddy. You don't have to volunteer a whole lot of information out there, but you got to work with them. You got to make their job easier. They'll be easier on you. I mean, we hear these horror stories all the time. Yeah, the auditor came in and we put him out in a trailer in Austin, Texas, in the middle of summer. It was 115 degrees. They were gone in 15 minutes. Yeah, the auditor's going to get the last laugh there. They're just going to put everything into the audit and make you prove that they're wrong. So you don't want to antagonize the auditor. They have too much power when it comes to making your life a lot tougher. So you make their life tougher, they're going to make your life tougher. They're human. The opposite up in Michigan. Oh, we put them in a boiler room, no insulation, no heat. Um, minus 15 degrees in there. They were gone in 15 minutes. They're going to have the last laugh. So that's part of treating the auditor as a professional, keeping the emotions out. When we're talking about big, big money, it's always better, in my opinion, to have another set of eyes in there. We may have had similar experiences, or we may have relationships with certain auditors, that it's not what but you know how to address an auditor. You know where to give in order to get. And the end result can be a lot better for you. So If you've got large assessments, and a large assessment for some people, we just had an issue today where the auditor had disallowed an exemption certificate on $40 million worth of sales. And uh, when we got in and we talked about it and we laid everything out, this is something we've gone before. This is the biggest one we've had, but we said, hey, this was accepted in good faith. We had all of the statutes to back it up. We say, here's the actual fact pattern, because this auditor wasn't budging. And when we were all said and through, we knew how to approach this. They waived it. And instead of it being a $3.3 million assessment, it was a $12,000 assessment. Huge swing there. So the larger the amount of money at stake, the more you want to use a third party, just to have a second set of eyes, just to have someone who's doing this as the regular course of business. Now, not everybody has $40 million problems. Like I said before, if it's material to you, and that may mean, $20,000, our fees are going to be less than $20,000. If we think that we can help you out and save you more than our fees, then we're going to let you know that. If we think that we're not going to bring any value to this, then we're going to let you know that too. Now, sometimes even when we let someone know that we don't think that we're going to be able to save them enough for our fees, because we're handling the audit and we're going to do it most times remotely, because someone's not coming to your place of business where they may hear things and open up another can of worms or whatever else. Sometimes they want to pay us just to run interference, just to handle all of the conversations and get all of the information to the auditor, make sure they're being treated correctly, get peace of mind, and so that the auditor is not intruding on their everyday business. Some people pay for that. So, peace of mind, or the potential for what you consider to be a large potential assessment. Now, something along the lines, if you know that state's going to have you dead to rights, you figured out that there's a problem, and it's going to take a miracle for the state not to find it when they're auditing you, then maybe you be proactive and you do what's called a managed audit. And it's not available in every state, but a lot of states have it. California has a really good one. And because a lot of people hire third parties like us to do these audits, and you can't get away with murder when you're doing a managed audit, and we're doing the audit for you because we're doing it under the supervision of the state. So we got to walk that fine line. However, because the state doesn't have to send someone out and do this audit, they're going to reward you for that. And they're going to waive, generally, like California is generally the penalty, and 50% of the interest, which if you know there's a huge problem and there's no way the state's not going to find it, be proactive. Ask for a managed audit. And whether you do it yourself or through someone like us, I would do a third party when I'm doing a managed audit. There's just less chance to fudge. We're gonna, know where that line needs to be drawn. Then I think that's a way to prepare for sales tax audit too. If it's up in the air, then you don't have to go through a managed audit. But if you just know the state's going to find you and it's going to cost you a lot of money, well, there's nothing to argue on the taxability part. The tax you owe is the tax you owe, but that waiver of penalty and 50% of the interest, or in some states, 100% of the interest, some states, none of the interest, but it can be a huge game changer for you. So that's another way that you can be proactive when it comes to preparing for a sales tax audit.
Okay, fantastic. Thank you, Mike. Go ahead.
And I was going to say, I'm referring back to the previous question at this point, but that's another reason why you may want to hire someone like us, or at least talk to someone like us, because you may not know when the best time to ask for a managed audit is, when we may be able to say, hey, the state's got you dead to rights. Let's go for a managed audit. We're not going to be able to help. This is black and white. You just missed it. And the state's not going to miss it. Let's let's ask for the managed audit so we can get the penalty and interest reduced.
Thank you so much, Mike. Thank you everyone for listening. Hopefully there's some really helpful, good information here. If you have sales tax needs, we offer many solutions and services, and we have a lot of online resources for you. We've mentioned some of them today in this podcast. There's a whole series of webinars. We have these podcasts. There's a lot of free information on our website, as well as paid resources as well. So you can reach out to me directly. My email is emoffat, EMOFFAT at salestaxandmore.com. You can also go to salestaxandmore.com. And thank you so much, everyone, for joining us today.
Take care, everyone, and hope to see you on the next episode of the Sales Tax and More podcast. Bye-bye.
Thanks for listening. Be sure to hit subscribe and check out all the resources we have out on the web.